The crypto market feels brutal right now. Prices are down, sentiment is weak, and a lot of people are asking the same question. Why does crypto look so bad, even though so many indicators say this should be a good time? To understand what's really going on, we need to combine macro data, market structure, and on-chain fundamentals. And once you do that, a clear picture starts to form. One of the most important macro indicators right now is the ISM Manufacturing Index. This index measures economic activity, and the key level is 50. Below 50 means the economy is contracting. Above 50 means the economy is expanding. Historically, improving ISM trends, especially moves from contraction toward expansion, have coincided with stronger performance in risk assets, including crypto. Recently, the ISM has moved back above the 50 level, signaling a potential shift toward improving economic momentum. That doesn't mean crypto goes straight up tomorrow, but it does suggest that the broader economy may be stabilizing. And when macro conditions improve, risk assets like Bitcoin and altcoins tend to benefit over time. This is why many long-term investors believe Bitcoin may be trading at an attractive value relative to where macro conditions could be heading. Now let's talk about Bitcoin itself. On higher time frames like the weekly chart, Bitcoin is still in a corrective phase. There are bearish signals that have not been invalidated yet. So it's important to be clear, the long-term trend is not fully bullish yet. However, markets don't move in straight lines. In the short term, Bitcoin has reached a major support zone between roughly 74,000 and 76,000. This area acted as strong resistance in the past and has now flipped into support. As soon as price entered this zone, buyers stepped in, exactly as expected. At the same time, Bitcoin became deeply oversold on the daily RSI, even more oversold than during some past panic events. Historically, when this combination appears, strong support plus oversold conditions, the market usually gets a relief period. Not a guaranteed bottom, not a massive bull run, but a pause from heavy selling. Based on historical price patterns, Bitcoin is currently repeating a structure very similar to what we've seen in past bear market phases. After a sharp drop, markets often move sideways or bounce modestly for 1 to 2 weeks. This helps reset indicators like RSI and funding, and that's exactly what the data is pointing to now. On the 3-day time frame, Bitcoin is also close to confirming a bullish divergence, where price makes lower lows, but momentum starts improving. If confirmed, this usually signals short-term relief, not a full trend reversal. So the most likely scenario over the next couple of weeks is choppy sideways movement or a modest bounce. After that, further downside is still possible later on. Another important signal comes from funding rates across major crypto exchanges. Funding rates for Bitcoin and many altcoins have flipped into negative territory. This means short sellers are paying fees to maintain their positions, while long positions are earning those fees. Even if price moves sideways, shorts slowly lose money, while longs benefit. This dynamic often leads to short covering and new long positions, both of which add buying pressure to the market and support the idea of short-term stabilization or relief. Bitcoin dominance has been rising toward the 60% level. This suggests that Bitcoin is currently outperforming most altcoins. In the short term, this means that if Bitcoin experiences a relief bounce, many altcoins may lag behind or move more slowly. This also indicates that a full altcoin season is unlikely to begin immediately. However, if Bitcoin dominance stalls or rejects from resistance, some altcoins may experience temporary relative strength. Ethereum is holding a key support zone around the low 2000s and is also oversold, similar to Bitcoin. This supports the likelihood of a short-term bounce or sideways consolidation. Solana is showing a clean bounce from its major support zone in the mid-90s. again combined with oversold conditions, which fits the same short-term relief narrative. XRP remains weaker on higher timeframes, although it may experience a short-term bounce alongside the broader market. Structurally, it still appears vulnerable if the larger bearish trend resumes later. Despite weak price action, the fundamentals across the crypto ecosystem remain strong. On-chain activity is growing, transaction volumes are rising, stablecoin usage is increasing, and Ethereum continues to dominate decentralized finance. This disconnect between improving fundamentals and falling prices is something that has historically appeared near major accumulation zones rather than at market tops. The long-term trend is not fully bullish yet, and further downside later on is still possible. However, in the short term, the combination of macro improvement, strong support levels, oversold conditions, negative funding rates, and historical patterns points toward a period of relief. This relief may take the form of sideways movement or a modest bounce over the coming days or weeks. Moments like this are uncomfortable, but they are often where disciplined investors begin positioning. Understanding time frames and staying patient is critical. The market rarely rewards emotional reactions, but it often rewards preparation and calm decision-making. If this helped you understand what's really going on in crypto, make sure to like the video and subscribe to the channel. It helps the channel a lot, and make sure you don't miss future updates.